Hello everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. If you're not already subscribed here, I recommend you do so because I update these three markets Monday to Friday. I'll update also on the weekend if something big happens. You're going to get my 15 years experience, over 10 of which now as a chartered market technician, on these three markets Monday to Friday for free, which is a good deal. So don't lose my channel, click the subscribe button, and if you're already subscribed, thank you very much for your support, and please don't forget to like and make a comment because all of your engagement helps. We've had a little bit of fireworks today in the crypto market, particularly with XRP, which I'll get to at the end. I've cut the video into chapters, so if you're only interested in one, just look at the chapters and you can jump through to the bit you want. Bitcoin's completed a bearish engulfing candlestick pattern on the daily for the 3rd of January. It has pushed from volume. We've seen strong bearish candlesticks before though. We saw a good one on the 11th of December and it only led to sideways movement. So far the trend is sideways. This is after a short-term high though, so the bearish engulfing pattern is in the context of some overall upward movement. It could be indicating a shift to a pullback. If we do see a pullback, I'll be expecting really strong support at 38,500, but before we get there, expect support at 41,100 is most likely to hold despite the push from volume today. This candlestick also has a really bullish long lower wick and it closed above support at 41,100, so it hasn't been able to break below that really important support. Let's expect this is part of the overall consolidation. We may have a little bit more sideways movement before the overall upward trend resumes. I've taken away the notes and guides for that potential pattern. It was getting a bit old, a bit long in the tooth. It was over 15 sessions, and so the probability of it working had reduced anyway, and it didn't work. We got an upward breakout, which had pushed from volume, but today, or the session for 3rd of January, has negated that. 3rd of January has quite a strong push from volume. There's such a bullish long lower wick there. I wouldn't read that only as bearish. I would want to see that support at 41,100 confidently breached by a close below it before I became bearish short term for Bitcoin. On balance volume remains above this big support line I've drawn. It touches this pivot, nearly this, and there's some other little tests that fell short here. So it's long held, there's a few tests, but it's got a pretty good slope. It might assist to halt a fall in price if we see another downward session for the 4th of January. But if we saw a break below this purple support line, that would be a weak to reasonable bearish signal. The slope of the line really does reduce the probability. I much prefer lines like this that have a shallow slope. We've got a bullish signal here. That's immediately been negated now because on balance volumes returned back below the line. These signals from on balance volume, we've seen them work a few times really, really well indeed. This is one instance where it hasn't worked perfectly, and that's a really good illustration of something I keep saying, which we really do need to wrap our heads around. None of these techniques work all of the time. Most of them work more often than not. Some of them, like on balance volume with support and resistance, work much more often than they fail, but sometimes they fail. None of this is 100%. If some of it was, we'd all be multi-billionaires, and that's not how markets and technical or even fundamental analysis work. It's all an exercise in probability. So next support for on balance volume, the purple line, has some reasonable-ish technical significance. ADX is declining, the DX lines are whipsawing, there's no clear trend for this market. The ADX line is now getting pretty close to 15. A sharp increase in range today that adds to a short-term bearish possibility. Because there's no clear trend, utilizing a model of stochastics plus support and resistance, we'd expect stochastics to continue lower to about the midway line, because that's where it's been ending recently, and price to continue lower to support at 41,100, or if it broke below there, 38,500. Moving on to Ethereum, this was my main wave count for Ethereum and I had an alternate. This wave count saw minute wave 2 over here at 2115.85. This is now invalidated with this wick of the 3rd of January, and this is an illustration why I keep saying Elliott Wave rules are absolute. A fraction of a cent on a tick chart will invalidate an Elliott Wave count. So I move now to the next likely outcome, and I'm looking at this now for Ethereum. A little bit more of a pullback now. It could be over here, and I could relabel my new to WXY, with Y being a zigzag. but I think this has a better look. Looking at minute wave 2 as an expanded flat, 3, 3, 5. So we need a 5-wave structure down now for C to reach the target zone, which is the 0.2382 Fibonacci ratio, log function of, and 1982, where minuet C reaches 1.618, the length of minuet A. So a little target zone for a little bit more downward movement, a little bit more of a pullback for Ethereum before a third wave up at 5 degrees. 3 or 4 of them really big degrees. So it's a hugely bullish wave count, but price doesn't always move in a straight line. You have pullbacks and consolidations along the way. This downward session today for the 3rd of January does not mean that there's a huge bear market. It's a strong day, it's whipsawing, there's a bullish long lower wick, we've got bearish reversal patterns. It's in the context essentially of a consolidation though. Minute 2 may not move beyond the start of 1 below 1521.78. I do not expect price to get that low. If it was especially deep, I'd look for support at the lower edge of this channel. I've copied it over from the weekly chart. Technicals on the daily for Ethereum, I'm removing that short-term flag pattern that I had here for Ethereum. It looks unlikely now. It's been negated anyway by the wick of the 3rd of January's candlestick. These 3 candlesticks here together make an evening doji star. That's a bearish reversal pattern. I'm not going to give it too much weight though, because it's not actually in the correct context of an upward trend. It's in the context of a sideways consolidation. For a bearish reversal pattern to be a reversal pattern, it has to have something to reverse. So you should be reading bearish patterns in the context of upward movement and bullish patterns in the context of downward movement, not as part of a consolidation. So very little weight given to this. It does have push from volume on this bearish candlestick for 3rd of January though, but really importantly, just like Bitcoin was unable to close below support, Ethereum has wicked below it, but is unable to close below support at 2,100, which continues to be very strong and continues to hold. I'll expect that's most likely to hold until it does not. It's kind of like my assume the trend remains the same until proven otherwise. If you follow that mantra when a market is trending, then you're not going to be trying to pick highs and lows. You're going to be assuming the trend remains the same until the pattern of the trend is changed or a strong channel is breached. We've got a lower low or a lower high. Something really changes. It's really different. So assume support at 2,100 holds until it does not. I hope that makes sense. Let me know if what I'm trying to explain doesn't make sense, and ask me to try and explain it a different way in comments, and I'll rack my brains and try and come up with a better one for you. Volume pushing price quite strongly on that last candlestick. Overall price is moving sideways, and it's downward sessions within this sideways movement which are stronger, which does suggest we might be about to see a bit of a pullback from Ethereum. So use those support lines. If 2,100 is breached, look out for next support below. The last signal given by on-balance volume was a break below a really weak support line, so a very weak bearish signal. And now we've got a pivot formed on the underside of that support line, so a back test of resistance and moving down and away, behaving just like price does with trend lines. So here is another weak bearish signal from on-balance volume for Ethereum. ADX is essentially flat, the DX lines are whipsawing, no clear trend for Ethereum either. The model of stochastics plus support and resistance isn't really working very well for this market at the moment. Unfortunately, it doesn't always work well. Well, all I can say about this is stochastics is moving lower, price has had a downward session. That model would expect more downward movement from price to continue until it finds support and stochastics reaches closer to oversold. But the caveat is that model has not been working well at all recently for Ethereum. My Elliott Wave count for XRP has changed. I'm seeing a double zigzag now complete, possibly for minor wave 2. W, first zigzag in the double, is labelled minute W. The double is joined by a 3 in the opposite direction, which is labelled X, and subdivides as a flat 3, 3, 5, a regular flat with a rather long C wave. And then minute wave Y, the second zigzag in the double, is labelled A, B, C. And B here subdivides as an expanded flat 3, 3, 5 with subminuet C and ending expanding diagonal. This meets all Elliott Wave rules. The only problem is mini wet wave C has quite a strong 3-wave look. Someone's asked me in comments, can you see the triangle on XRP? They didn't actually state which market, but I'm going to guess. If you want to ask a question of me from these videos, please tell me which market you're referring to. I've got 3 here. It's a little confusing and I don't like making assumptions. Yeah, I can see something that looks like a triangle, but I'm going to show you the reason why I'm not publishing the chart of it, because it's problematic in Elliott Wave terms. For a classic triangle, yep, you could draw your trend lines, and that's going to be fine. You'd have your resistance line here. Oh dear, but it's only got 2 tests, so pretty low significance. You really want more tests than that for even just a classic triangle pattern. You draw your support line along here. Again, only 2 tests. Not a great classic triangle pattern. And here's the problem with an Elliott wave. So it could be a triangle. We could have the triangle cannot be in a second wave position. It can be a B wave or an X wave or a 4th wave. It doesn't really work as a 4th wave. Wouldn't really want to go 1, 2, 3, 4, 5 because the proportion is just horrible. So what about a B wave? What about A, B, C? Now here's the problem with the triangle. We've got A, B doesn't move beyond the start of A, so it's a regular contracting triangle. C, no problem so far. D, okay, still looking good. The problem here is E. E has to subdivide as a zigzag. I do not want to label it over there. Way too brief and shallow. When your E wave is that short, you're forcing the triangle. It's got to look right. E has to be a zigzag. A, B, C. C has to move below the end of A. So we have to see a new low below 0.4456 for this triangle to look right, because that's where C avoids a truncation. It moves beyond the end of A. Truncations are very rare. So this wave count sees the triangle as incomplete. Now the other problem is there's only really falling short weak tests of the triangle trend lines. Elliott wave triangles, like classic triangles, should have their trend lines with more than just 2 or 3 anchor points. You really should have the BD trend line touched and the AC trend line touched as well. It's kind of touched here for January 2023, but it's fallen short even there, and there's no touches of the BD trend line apart from the anchor points. So it just looks rather forced at this point in time. I've learned the hard way over the years to be pretty skeptical of Elliott wave triangles. They're such tricky structures. They have to meet all the rules. And so many times what you think is a triangle unfolding turns out to be a series of first and second waves, or it turns out to be some kind of combination. For XRP, I had noted a classic descending triangle, and I said that 64% of the time the breakout is downward. We have a huge lower wick, but we don't actually have a downward breakout because this candlestick for 3rd of January has not closed below support. And so if we don't get a breakout for the 4th of January, a close below the lower edge of this descending triangle, then the triangle has failed, and I'll remove this note for a descending triangle, which I have had a question mark on this whole time because it's only got the 2 tests along here and 2 tests falling short here for the 28th of December as well. We don't have a lot of tests of the triangle trend lines. Descending triangles, classic ones, are pretty tricky structures as well. They're quite often difficult to identify. They are either continuation or reversal patterns. They most commonly break out downward. So far, support at 58 cents is still holding for XRP. It was wicked below that today and immediately returned above. So support about 0.4875 is held, but support at 55 cents, the wick is below that. I had expected price to not make any new lows below 55 cents, so this is not what I expected from XRP for the short term, but it is bullish that price is unable to close down in this area. It was immediately pushed back today, but I'm sure it breached a lot of people's stops. That's what wicks do. They're really annoying, aren't they? And that's another reason why I'm not trading these markets at all. I don't want to have a bar of trading a volatile market like this. I'm buying and holding for a long period of time, including in this market. A really strong push from volume. Now, this happens either during a bearish move or at the end of a bearish move, and there's just no way to tell which of those two scenarios is happening here. I think the very bullish lower wick on the 3rd of January is giving us a clue that may be the end of downward movement for the short term for XRP. There's a weak bearish signal from on-balance volume, the break below the purple support line. This line has 3 tests. It's somewhat long held, but it's got a steep slope. So the bearish signal may well now be resolved. It was quite weak anyway. ADX is increasing, but it's below 15, so it's too low to tell us there's a trend. And while it's been declining and below 15, the DX lines are whipsawing. So we need to wait for ADX to get to 15 and have a positive slope, and then we look and see which DX line is on top. That tells us the direction of the trend. That's it for me today with your quick update for those 3 markets, and I hope everyone has managed to survive through today's whipsaws and you're all doing okay.